All right, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. Check us out at jazzwealth.com. And today we're going to talk about building a portfolio in this year, 2017, with the markets where they are. What do we do? And I'm going to use a real live example of an existing client that we have. But don't worry, if the regulators are watching, I'm going to keep it clean, nothing wrong. All right, here's the thing. It is 2017. You're looking at your portfolio and you probably like what you see. The markets are doing quite well, hitting all-time highs as we speak. Quite impressive. Now, I want to talk about building a portfolio because when you come to me, we're going to work with you to build a portfolio that you like. Of course, I'm going to have my suggestions. That's what we do. We specialize in picking those investments, but we never get paid a commission for suggesting an investment to you. I get nothing, right? So you know that if I make the suggestion of 3 or 4 different products, it's because I think it benefits you. It's not because I get any kind of a commission, which is much different than those big companies that you see on TV. When they suggest a product to you, you know it's the product that has the highest possible commission for them. Makes sense. If I worked for them, I would be doing the same thing as well, but I don't. I disagree with that 100%. So if you're at one of those companies, you don't get a say in what's in your portfolio. If you're at an automated investing service, you don't get a say in what's in your portfolio. They're just going to choose from 12 index funds, maybe 13 or something like that, and you get what you get, right? Right now, that seems great because the markets are going higher. You just think, oh great, I'm doing well, everything's cool. Well, that's going to change. At some point, the markets are going to have a down year. I'm not saying things are going to crash, but they're going to have a down year. So I want to talk about building a portfolio with you in mind, with the investments that are best suited for you. And I'm going to use an example of an existing client. I had a client come to me and they are a quite sizable account, okay? They're not just getting started, they are actually retired as a family. And so their goals are different than other people. I had a client just the other day come to me that was just getting started and is in growth mode, okay? So they're gonna be completely different. What we do over here is completely different than what we would do over here for the retired person. At an automated investing service, they're just gonna use a little less of some of the products for the retired person, and then they're gonna use a little more of the products for the non-retired person. So I was looking at their portfolio and I said, okay, I see everything you have. When I got to the bottom, I saw that they had 1/3 of their account in one stock. I'm not going to name the stock, but it's a very well-known stock. It's a well-known stock, right? I'm not going to get carried away. So let's say they broke their portfolio into thirds. And this down here was one stock, one name. You've all heard the name. If I mention it, you know exactly what I was talking about. But 1/3 of their retirement was in this one stock. And the customer actually said to me, I want to keep that. I don't want to get rid of it. So they're in retirement and they know that 1/3 of their retirement is based in one stock that they hope goes up, you know, forever. The rest of their portfolio was actually in pretty good investments, some mutual funds and things, but they had really high fees. So what I said is, okay, let's not talk about this for a minute. Let's go up here. We're going to put a couple investments rather than have 2/3 left to work with and just pick a few mutual funds or whatever. We were going to do some S&P, okay? We were going to do some bonds, and then we were going to go have some other investments. They have some gold, and they have some oil, okay? Not that this is right for you, but this is just what I had to work with. And so the client came to me and said very clearly, you're not getting my business unless you keep this position. They happen to work for this company, so the shares were given to them, but still, that's 1/3 of the retirement, 1/3 of everything they work for. And I say, you know what? I disagree 100% with what you have here. If you keep this, I am going to lose sleep, and I know that's not your problem, but it is my problem. I'm losing hair up here. I don't want to keep this 1/3 of an investment. And they said, fine, I can't work with you. So the beauty part about working with Jazz Wealth here is they wanted something, we wanted something, which we thought was best for them, and we were able to work something out. Here's what we did. We said, okay, this is a lot of risk. There's no argument there. To put 1/3 of your account, a sizable account, into one position is too much. So we came up with the agreement that when this stock hit certain prices, we were going to rent it out. And the customer was like, I don't get it. What does that mean? After explaining it to them, they were able to understand that we can reduce the risk by letting other people pay them rent for that investment. And there's actually quite a bunch of people that want to pay rent for this particular stock. Okay? So this helps reduce the risk here a little bit. Now, who's going to do that for you? What automated investment service is going to say, we need to reduce your risk? If he would have transferred this account over to an automated investing service, they would have automatically sold that because they don't work with that product. If he were to go to a large company, they would have said, fine, if you want to keep that, that's fine. We'll put all this other stuff in there, no problem. And they would have made him sign something saying that was your decision. So when things go to hell and everything starts falling, they can't blame the company. Okay, no problem. So what we did is we kept this position and we've been renting it out, reducing the overall cost. Now the cost was free. He got the shares for free, but they were put to him at a certain price, okay? So we've been reducing his risk. Then I said, let's make this sort of portfolio here because they're gonna kind of balance out each other. Not perfectly, but they're gonna work against each other. So if the S&P starts to rise, then the bonds should fall a little, gold may fall a little, and maybe oil goes along with it. So you can see this sort of tug of war that we had with the portfolio. Now I like that because he's retired. We don't need growth for someone that's retired, especially when they have this big position here. So why would we buy positions and then just let them fight against each other and never make any money? Well, we took it a step further and said, okay, we're gonna take these positions and we're gonna rent them out, all right? So this retired person has these positions, but we're gonna rent each one of them out so that they can get that income. Because you can't get income anywhere else right now. If you're buying bonds, it's a little tricky. It's getting better, but it's getting a little tricky. So here we have this portfolio from here up, 2/3 of the portfolio, that is essentially neutral, meaning when one goes up, the other's gonna go down to some degree. Now, it's not one for one. You can't just go buy the S&P, buy the bonds, buy gold and oil. There's a ratio that you have to work with so that they do balance out. So you can see what happens. This is all gonna cancel each other out. The price movement of these positions doesn't matter at all. All that matters is that every single month we get someone to pay rent for these products. And we're gonna keep this balance going. Imagine you're on a seesaw or something, and you're just keeping that balance. Nobody's winning one way or the other. The positions are going like this, but that income is coming in the whole entire time. So what we've essentially done is built a portfolio that's neutral, and all I have to worry about is this here. Now, I'm not just sitting back and saying, oh, well, I wish you the best. We're actually working to rent this part of the portfolio, and it's making a huge, huge difference for this person because they are at the point in their life where they're taking money out. Every month they need some money to live off of. Where are they getting the money from? Well, this has been doing well recently. It's bounced a little bit. They're still getting the rental income, and because that position is so high, I'll give you an example. This position is so large, it's like having 16 homes. That's how big this one position is to them. 16, right? So imagine the rental income on 16 properties. Imagine the capital that goes into 16 properties. So they're able to take some money here and obviously live off of that. And then this part of the portfolio, they could care less what happens to. I could care less what happens to these positions as long as we keep getting that rent. Now, this is for someone in retirement. If you're in growth mode, we can do the same thing, but we wouldn't balance these positions out. We would try to work with positions that are mostly moving in the same direction. And it wouldn't be any of these, but they'd be mostly moving in the same direction. And as they do, we'll only rent out a couple of them because we want the growth. We want you to make money off the appreciation. You don't need the income so much, but to reduce risk, we'll rent out some of them. So that's how we would do that for a growth investor, okay? Now, whether you're retired, you have quite a sizable nest egg that you've saved up, or you're just getting started and you're saying, look, I kind of want to work with that. I want someone that's going to work with me in the positions that I want. That's what we do. jazzwealth.com. Feel free to check us out. If you want to learn more, go to the top of the website, click schedule a call, put your local time in there in the state that you live in so I know what local time it is, and I'll call you at that time that works for you. Hope you learned a little bit today. We're going to do a lot more of this, and hope to talk to you soon.